Alright, hello everyone. Today we have a new video. We're trading binary options on the Pocket Option platform. I've left a registration link in the pinned comment. Be sure to join. Today we're trading based on technical analysis. We won't use any third-party tools. We will only use what is available on the platform itself. Also, our expiration time is 1 minute and our time frame is 1 minute, but we will also switch to the 5-minute chart. I'll explain why. On the 5-minute time frame, we can see the price action better. It provides a complete picture of the movement. We can see even the slightest changes in the overall trend. Therefore, on the higher time frame, it will be easier for us to find a reversal point. On a lower time frame, we will look at the direction the price is moving and open a trade in that direction. Overall, support and resistance levels will certainly help us with this. The trade amount is 100 bucks and the expiration time is 1 minute. So let's start with this asset, euro to New Zealand dollar, switch to the 5-minute time frame and begin analyzing. We immediately mark all important support and resistance zones. For clarity, we put horizontal levels. Don't hesitate to use them, because the more you set at the correct points rather than randomly, the more accurately you can find an entry point. For example, here I can set 3 such lines and they're well justified, I would say. We have price reactions from these levels. Taking this specific movement from here, the price started an impulse move, a small correction, and then upward movement. Resistance zone, then a pullback to the support zone. Now at the support zone, notice that the price is stalling. That is, the price didn't break through the zone. On the contrary, it's bouncing off it and wants to continue moving up. Accordingly, we switch to the 1-minute time frame. Currently, a retracement is happening on the 5-minute candle, and the price is moving exactly level with our zone. Pay attention to the candlestick wicks. The third wick is forming now, and on this candle, we will open a position. It is forming as a green candle. We open a trade in this direction. Also, in case of a loss, we always have the option to use a recovery trade. Accordingly, look now, the position opened higher than intended. The best entry point in this asset is here, at this level. But since we opened early, the point here, if touched, if the trade closes at a loss, we'll open another position for a bounce from this level, but we double the amount. But I hope it doesn't come to that. Often price volatility is a major headache and a help at the same time. If you take a $100 trade, it's best to split it into 10 parts of $10 each. This way you minimize risk and perhaps not the entire $100 will be lost. Therefore, split your trades. I can show you how in the next example. So our first position closes in the money. $79 in net profit. Moving on to the next asset, we find movements where the price is more or less in a sideways range. Of course, we can use trends as well, but it's best to trade technical analysis specifically in ranges. What is a range, you would say? Let's take this interval, place a rectangle here, and see that the price is moving within this box. It goes from this level to that level and so on. It's all repetitive. We switch to the 5-minute time frame. Here you see the movement and isn't large as on the 1-minute chart. Since each candle takes 5 minutes to form, the price is now back at the resistance zone. We set a horizontal level here as well. Look at the previous movements. Overall, this volume of information is enough for us. There was an upward move, then the price transitioned into this range. Touches here, 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 and here. Essentially, we see the price moving exactly from the support level to the resistance level. Now the price is at its peak. Notice there is an attempt to break the level. The maximum point the price reached after the breakout attempt is here, based on the previous touch. Switching to the 1-minute time frame, we see that immediately after the price tried to break this level, there is a bounce back. On this bounce, we open a position. Well, let's just split another 100 trade. You can wait for the timing. The more volatility there is on the asset, the more effectively this method becomes. If there's no volatility at all, then generally you don't need to split it. So we opened two positions for $100 on this asset. We opened after the price already reversed from the resistance zone, and now we will watch how this movement continues. We're getting a very good downward move. And looks like we're doing good. All our trades, including those split ones, also close in profit. Excellent result. We've already opened 3 positions during our session, and all 3 of them close in profit, returning to the $100 amount. Although, no, let's stop at 10. We'll just split on the next position. There are also days when there are no clean trades, when you have to open recovery trades, so there's nothing wrong with that. You just need to have a sufficient balance so you can further recovery of at least 3 steps. All right, let's take this asset, euro to US dollar. I'll say right away, this is a rather dangerous currency pair. I generally don't like trading it, but for the sake of the video, we'll try to analyze it now. So, what can we notice here immediately? An upward price move. In this specific interval, essentially we see the formation of a triangle or even a pennant. There were touches here, 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 and here. So you see a narrowing of local highs and local lows, which way to open a position, of course, is the question. Opening position now in this interval is best for a continuation of the move. The move is already going up. We pay attention to the candlestick wicks. They're at the bottom of the touching the support zone, switching to the 1-minute time frame. A small correction is occurring. On this correction, we open 10 trades at $10 each. You see there's a slight spread, not as wide as I wanted, but it's still there. It's possible that the lower trades will close in profit while the upper ones close in a loss. That's the worst case scenario. Of course, I'd like all trades to close exclusively in profit, but because we're trading on a short time interval, such outcomes are quite possible. The longer the expiration time you use, the more likely it is that trades will close in profit. But our task here in this session is to get profit as quickly as possible. By that I mean not to spend hours on analysis, but to trade familiar situations and patterns that we've traded before. And this accordingly can bring in money. And very decent money. All trades here close in the green. You see the trade splitting helped us significantly. And on that note, we'll conclude our session. I hope everything was clear to you. If something was unclear, write your questions in the comments. I'll try to break them down for you. I hope you learned something and will be able to use it in your own trading. Thanks everyone for watching, and until next time.